So here's today's question. I have about $41,000, I have about 41,000 shares of Dogecoin. How much would I expect to pay in taxes during tax season if I would take out 500 or $1,000 worth? All the Doge was purchased from 2018 to 2021. So that's the scenario. Today we're diving into a question I saw over on Reddit. The question is about Dogecoin. And if you sell your Dogecoin, what will happen with your tax bill? Hi, I'm Kamari Ellis. I'm a tax accountant for 35 years of experience. I'm also an enrolled agent, the founder of the Philly Tax Team. Welcome to the Finance Trouble Show. So the goal of this episode, I want to break down the numbers of this question. So I'm going to have to use my iPad. So I won't be able to look at you directly in your eyes the whole time, but I'm here with you. So let's lay the groundwork real quick. Cryptocurrencies, Dogecoin, Bitcoin, Litecoin, all of them, they're cryptocurrencies. They're deemed as property. They're treated as property by the IRS. So guess what? They get treated like any other assets or any other properties that are sold when it comes to taxes. Oftentimes, if you make money, if you have a profit, there will be taxes to pay. Now, typically when it comes to taxes and when it comes to investments or property, the sale of property, you have two types of taxes. You have capital gains, which are short-term capital gains and long-term capital gains. Short-term capital gains typically are higher, and those are for assets that were bought and sold within a 12-month period or a year or less. All right? Long-term capital gains are for assets that were sold after a year of owning those assets. Same thing applies to cryptocurrency. Now, depending on your income, short-term capital gains usually is about the same tax rate as your income tax, your overall income tax bracket. Now, for long-term capital gains, you will have a tax rate of 0, 10%, 22%. I want to say is the highest, but it's definitely lower than short-term capital gains. So here's today's question. I have about $41,000, I have about 41,000 shares of Dogecoin. How much would I expect to pay in taxes during tax season if I would take out 500 or $1,000 worth? All the Doge was purchased from 2018 to 2021. So that's the scenario. But I don't have all the information. You know, there's a couple things that are left out to really give a true, accurate assessment of how much tax he would be paying. One thing I don't know, what's his filing status, right? Other thing I don't know is how much income he's making, because all of that factors in to what tax bracket he's in, marginal tax bracket versus effective tax bracket. All those things matter. Now, I got my handy dandy iPad. I wanted to go over it with you or bring it out so I can read the scenario. Now, one thing I failed to mention is that I'll only be going over the IRS side of this because I don't know where the person resides and I don't know what state taxes they will be liable for. Now, there are about 9 or 10 states that don't have any income tax. Off the top of my head, places like Alaska, Wyoming, Florida. Let me look. How many others? South Dakota, I forgot about that one. Texas, Tennessee, New Hampshire, Washington, and so forth and so on. So they might not have any state income tax. However, be careful of that, double check, and also think about local taxes. Sometimes there are places like me, I'm from the city of Philadelphia, Philly Tax Team. You would have to pay, income tax on the sale of an asset. So you have to report that. So keep that in mind. But let's go into the scenario on how I broke this down. Dogecoin currently is trading at the time of this recording is at 46 cents a coin. All right. So the cost basis, meaning what they paid for the coins, all right, is on average is about 0.015 cents. So it's less than 2 cents, more than 1 cent. So just keep that in mind. And he also said that they purchased the coins between 2018 and 2021. And they have 41,000 coins in total. Now, I'm going to assume these are all long-term gains. because he brought the coins between 2018 and 2021. So for the first scenario, let's assume he's selling $500 worth of Dogecoin. If he sold $500 worth of Dogecoin, all right, Dogecoin is trading right now at 46 cents. You will divide 500 into 46 cents. All right, then that means you sold 1,087 coins. That's the amount of coins you sold. It's a little bit of math, nothing crazy. All right, now for tax purposes, we then had to figure out, we need to know how many coins he sold and then multiply that times his average cost to buy the coins. So that was 1,087 times 0.015. So again, it's less than 2 cents, more than 1 cent, cent and a half. All right. So that comes to $16.30. That's what's called the cost basis. All right. So to figure out what the gain is, you then take the $500 that you sold, you subtract $16.30, and then that brings you to $483.70. That's your profit. All right. That's how you determine how much tax you pay on it. You don't pay tax necessarily just on the proceeds that you get. You have to factor in what the cost basis is. And this tricks people up all the time. Okay. So again, long-term capital gains, the profit is $483.70. And I'm looking here, it will be roughly at a 15% tax rate. So you would owe $72.56. To round up, let's just say $73. Now, what would happen if you sold $1,000 of your Dogecoin? Okay, so if you sold $1,000 of your Dogecoin, again, Dogecoin selling at 46 cents, you take $1,000 divided by 46 cents, you're selling roughly 2,174 coins. I remember you need the coin amount so you can figure out your cost basis. And so then the cost basis is $32.61 because you multiply 2,174 times 0.0015, okay? 1.5 cents. So then that means your cost basis was $32.61. You subtract that $32.61 from the 1,000, that leaves you with $967.39. So that's what you're paying tax on, $967.39. And again, this is long-term capital gains rates. So you would owe roughly $145. Okay, so if you sell $500 worth of Doge, you're going to pay roughly $73 in taxes. If you sell $1,000 worth of Doge, you're going to pay roughly $143 in taxes. Again, all long-term capital gains rates, 15%. So I didn't account for any of any of the state. So you have to keep that in mind. Now, another thing I want you to be aware of is if you do sell, make sure you keep all your transactions, all your records, do good bookkeeping. All right. Make sure you keep track of the Doge when you brought it. I don't know if you brought it on an exchange like Robinhood or now wherever you might have brought it, but make sure you keep track of those records. I personally would take screenshots of everything, of all the transactions, keep them to the side. I do believe in keeping proof of your transactions just in case the IRS comes a knocking or any state authority, they want to audit your records. So you always want to have backup or proof or what they call substantiation. They like to use fancy big SAT words. Okay, so today, just to recap, we went down the scenario of what it would look like if you sold $500 worth of Doge or $1,000 worth of Doge, went through the numbers, figured it all out. And if, you need any more help with this, feel free to reach out to us at the Philly Tax Team. You can call me at 484-482-0823, or there'll also be a link in the bio where you can book a consultation. If anybody else has any other questions about Doge or cryptocurrency or taxes in general, feel free to drop a comment in the comment section or shoot me an email as well at phillytaxteam@gmail.com. All right. I'll be sure to add it into the show at some point or just answer your question randomly and maybe respond to the email. But if you enjoyed this episode, do me a favor, leave a like, a subscribe, and let me know if I'm doing a good job or not in the comment section. All right. Until the next time, y'all, Kamar Yellis.